Good evening and welcome to a brand new show of Markets Tomorrow. The event has come and gone and that has not nudged the market needle. The trend still remains the same. So now that vote on account is over, the big risk is out of the system. What should one focus on? What could influence and impact your portfolio? To discuss that, to dissect that, we've got a full house. Ramdev Agarwal, Joint Managing Director and co-founder of Motilal Oswal Financial Services. Along with him, Nilesh Shah, Managing Director and Chief Investment Officer of Envision Capital. And along with him, we've got Ajay Srivastav of Dimension Consulting. Ajay Srivastav, let me kickstart the discussion with you. First, what do you make of today's event?
Wonderfully relieved, and I think it's absolutely wonderful performance because the first time we've seen a government cutting 70 to 80,000 crores of expenditure in an election year. I don't think it's happened ever before. I don't think it'll happen again. And I think that shows the fiscal prudence that is now started to come into the political system. And that's a great relief because if you can cut 70, 80,000 in an election year, there is no reason for the same cut to not to continue to next year. I think that's been a great relief to my mind that this can be achieved in this system even in an election year. So a lot of relief that we have seen government cutting expenditures are totally wasteful and leaving the money with the private sector and the individuals. I think that's the biggest relief that we see from the whole budget exercise today, Nikunj.
So Ajay, if you are excited, I'm sure like you others are also excited. How come markets are not capturing that excitement?
You know what's happened, Nikunj, is what we did not capture for the last few weeks is gradually, if you see, the gold and silver has climbed back to 30,000 bucks for gold, back to 48,000 for silver, which is telling you that we are again getting into an equity risk aversion scenario, at least in a global platform. If you didn't notice it, and all the experts were saying that gold will crash to whatever level, Goldman issued a major claim on that. But what has really happened actually is risk aversion has crept in, the price of precious metal has gone up, and I think that's where a lot of money is going in, which is also telling us that you build your equity portfolio with a little bit of care and caution because there is semblances of global flows going back into precious metal away from equities, or at least a hedge is being created.
Ramdev, do you think Indian markets now have a decisive base in place? If one looks at the outcome of today's vote on account, it was more constructive, it was less negative and more positive. Given what is happening to global concerns also, emerging market currencies have stabilized, US economic data clearly strong, and a lot of experts are of the view that tapering is in the price.
Yeah, I think aggregate market broad numbers clearly have a solid base now with the kind of conclusion of this particular round of earnings call we have seen, and with the inflation broadly under control and currency very stable, and even in vote on account, if you see the speech, his commitment was very, very strong that we got to have a very controlled fiscal discipline kind of situation and controlled inflation. With that, my sense is that we have a very reasonable valuation and a very promising election going ahead. I would be surprised. The downside, I mean, upside could be anything, but downside is very, very limited from here.
Nilesh Shah, like Ajay pointed out, that a non-event has become a major event. So if a non-event has become a major event, how come market reaction is very muted?
Yeah, clearly I think that this was widely expected to be a non-event, and of course the excise duty cuts has brought some kind of life, particularly in sectors like the auto kind of sector. But I think clearly the market's mind is focused on that is the fiscal deficit number of 4.1%. How credible or realistic is that assessment? And I think clearly out there, that's where the market's concerns lie, that on one hand we have excise duty cuts, on the other hand we are going to have higher subsidies and a higher government borrowing. So in that kind of a backdrop, how achievable is the 4.1% fiscal deficit number? And this is surely going to put some kind of pressure on the government's borrowing programs, and therefore is going to put an upward pressure on interest rates, which I think at this stage, market I'm not too sure is very comfortable with that kind of a scenario. So I think that's why you have a pretty muted response from the market in response to the finance minister's decision to cut excise duty.
Ajay, if I really outlined the clear gainers and losers. Auto stocks or auto companies are right up there. Many participants are still of the belief that you cannot generate demand because of a cut in excise duty. Are you positive on autos, or you think whatever good things had to happen to auto stocks, they are now captured in?
No, I think it's a wrong premise to say nothing can happen to demand if you give them extra impetus in the price. Whether the quantum gives you commensurate benefit could be a questionable issue. But the fact is that these are companies which are already very profitable. So in the worst case scenario, if demand remains where it is, these companies become more profitable. So that can't be denied, the fact that if they either pass on the benefit to the market, you can't say the elasticity of demand is negative in this case, or zero for that matter. It is positive elasticity of demand very clearly for all these goods. So the benefit will come either on the bottom line or on the demand, or both spread over. So, as I said, this will surely benefit the industry. Obviously, it's either the bottom line or the demand. So the theory that no demand will go up, I don't think is correct, because we are animals of price at the end of the day. We love discounts, we love the price reduction, and the beauty is they're saying it's up to June. So therefore the call is that the new government may not extend it, so people who want to take a buying decision might prepone the buying till June quarter, and therefore one could see a bunch demand coming in April, May, June, and on the basis that this benefit may not continue. So I think it's a winner for them all the way. The market response, as I said, is muted because for various reasons, including risk aversion, generally speaking, but I think it's a strong positive in my view. And we have taken long positions, we have a long but added up to the positions in that manner.
If you're planning to buy, let's say, S-Class Mercedes, would you move up to a Rolls-Royce now?
At least I would buy it in June. If I was buying in September, I would say, now here is a definite benefit to me, so let me buy it now. And it's quite substantial. If you look at the excise duty cut in SUVs and all, it's quite substantial. Talking of even for a vehicle of 10 lakhs or 12 lakhs, you're talking of 40,000-50,000 bucks. That's quite substantial number. So if you take a crore rupee car, you're talking of a benefit of almost 8 lakh rupees. That's a substantial number.
Ramdev, I'm still going to stay with autos because that is the clear winner. That is an important part of the market. To your mind, what is the importance of today's excise duty cut for autos?
Yeah, I think I was thinking that revenue effort will be, any kind of give or take would be very, very minimal. But I think 4% excise duty cut on cars and motorcycles and scooters is fairly big. I mean, from 12 to 8% is almost like upwards of 7,000-8,000 crores of revenue loss and benefit to the automotive sector, which was in the woes of slowing down. And that's, I think, that clearly shows that now the appetite for growth is coming up and slowdown is really biting. And so maybe some appetite for growth is building up in Delhi, and maybe the next finance minister would be able to take it forward even more. But clearly this is a welcome change which has been brought by this budget.
Nilesh, this question is coming your way. And in the overall scheme of things, where do you think bank will fit in now? If the economy is looking up, rates will come down. If rates will come down, bond yields will go up. And if bond yields will come down, profits for banks will move up.
Well, that's a very simplistic assessment. I'm not too sure how this assessment will actually play out. I still believe it is premature and very early in the game to start believing that interest rates will start coming down. In fact, I wouldn't be surprised if interest rates actually hold up at this level, at least for the first 6 months of the next financial year. I think the bigger challenge for banks, and I probably refer to more the public sector kind of banks, I think the bigger challenge out there is basically reorientation of how these banks function. The bigger challenge out there is asset quality. The reality is that asset quality is deteriorating. There are no signs that deterioration in asset quality is stabilizing. There are no signs that asset quality is actually improving. And I don't think that will change till we, reassess the very functioning of these banks, and one has to therefore go to the core of these banks in terms of their risk management and their risk assessment. I also believe that this deterioration in asset quality is more structural in nature rather than cyclical in nature. So unless the new government comes in and reorients the way the banks function and infuses a lot of capital, I really don't see, before anything like this happening, the banking sector to kind of revive. So I still believe that you might still have an upside in the markets, which could be driven by a whole host of other sectors, but I still believe that it's too early to say that the worst is over for banking stocks and the banking sector, and I wouldn't be surprised if the banking sector continues to underperform in the markets for the next 1 or 2 quarters at least.
Ajay, you've been very vocal about why one should avoid buying into banks. Is it time to change that line of thought?
I think when you mentioned last, I said tactically the time has come and we changed that tactically. We must be long in the market, and that was when about 200 or 300 points lower than this one, and I still hold on that strategically you may not like the sector for all the reasons Nilesh said, and I think most of them are correct perhaps, but I think there is also a point of in a demand supply that you feel that exhaustion has set in either on the upward move or on the downward move. Our belief is there is substantial exhaustion on the downward move, at least for some time to come. So tactically for short term you could see a good fill up coming into the price, including the bank nifty, to give you a good run up of 4, 5, 7, 10%, whatever it comes your way, to pick up that gain from the market. And again, the theme is back to what we said, Nikunj, the theme is in this market, I don't know how to pick up, apart from IT and pharma, I can't imagine to pick up long-term winners and gainers, because it is more volatility that you have to milk rather than do investment decisions. You could see HDFC Bank in this range maybe for another 2 years, because they've got 4 flat quarters in the last, and I think 3 flat quarters ahead of us. So you will never find them as a long-term investment bet, but when it comes to 620, maybe you buy in at 650, 670, you sell off. So it gives a good trading platform. I don't believe that the investment horizons for these stocks have come at this point of time. Rather stick to IT, where I know that the stock price will go up by 40-50% a year from now, but tactically you got to be long in the banking sector. You should have been long in the last few days. You should be long today, because there is a gain which is coming. There is exhaustion on the downside. The results are out of the way. Now there is some amount of bargain buying happening, and you want to take the money off the table.
Let's go to Darshan Mehta for some stocks which could influence your portfolio tomorrow.
See, Nikunj, Adani Enterprises is something that you should watch out for. Some of the institutional dealers have indicated that a domestic mutual fund has been accumulating the counter, pretty much ending at the day's high today. There is a buzz of a possible corporate announcement that could come in. So Adani Enterprises is something that you should watch out for. The second stock that you should watch out will be Aurobindo Pharma. This one also gained. Dealers are recommending to buy this counter based on technical trends. The other big positive is that the counter has come out of the F&O ban. So today even there were F&O volumes, and this counter always moves up significantly when comes out of the F&O ban. So these two stocks is something that you should watch out for.
Ajay, in terms of an idea, we've discussed a couple of ideas last time when we interacted with you. Have you added anything after Dabur or Fortis?
Not really, no, not really. I think we haven't added very much after that, and we really, actually, no, we are not added. As I said, some capital got allocated to banks. I think that's quite a bit of money which went to banks as the capital allocation. So nothing of investment buying at this point of time, except tactical buying in banks and autos, which has taken up a lot of our capital. And back to the point that we are still remaining 40% in cash, because given the global scenario, you don't want to be going all in at this stage.
Ramdev, closing comments from you. Ultimately, it's all about money-making ideas. So based on today's vote on account, how will your approach change? Would you still like to buy into IT, or would you still like to change, or would you like to change your portfolio stance?
Broadly, things don't change, but clearly, domestic automotive plays, they were already there, part of the portfolio. So it is a little refreshing to see this is one small change where excise duty reduction has come. But I don't think this budget has anything. I mean, actually, it was very pleasant to hear the finance minister that in his brief last spell, he could bring that discipline. So, you were having discussion about what is the guarantee that next year's number would be adhered to or something like that. I think it is about a person. So, like, we have a very credible governor and this outgoing finance minister. I think if we get